What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is April 15th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I not only want to talk about one of the three major catalysts that I believe will carry forward Bitcoin going into 2020 and beyond, but along with that as well, I want to discuss some data in regards to the performance of financial markets historically, and then also dive into some of the real economic expectations for quarterly GDP and unemployment. So we've got a lot of interesting things to dive into in today's video, but we're going to be diving into it right after our quick sponsor. Our sponsor for today's episode is Ledn.io. For those of you out there holding Bitcoin long-term like myself, why not put it to work? Ledn has a suite of services to help you save, earn, and hodl more Bitcoin. Their B2X loan service lets you double the amount of Bitcoin you own through a Bitcoin-backed loan. Their savings account lets you earn interest on your Bitcoin, paid out in Bitcoin, so you can grow your holdings over time. And with their Bitcoin-backed loans, they let you access cash in a tax-efficient manner while keeping your Bitcoin under insured custody with BitGo and real-time proof of reserves. Get a 250,000 Satoshi bonus if you register with the link below and get a loan today. Alrighty, so to start off, I wanted to let you all know real quick that I'm going to be attending a virtual cryptocurrency conference known as Blockdown 2020. It's going to be hosted from April 16th to the 17th from 9 a.m. to 9 p.m. Central Standard Time. So I'd really love to see you guys make it out. The cool thing about the conference is it's one of the first of the major virtual conferences in the cryptocurrency space, but along with that as well, to really this scale, I don't think we've ever seen something like this in crypto. There's going to be 3D exhibits. You'll be able to see a wide range of top tier speakers here in a virtual format. And what's nice too is that the tickets are relatively affordable and stuff compared to a lot of other conferences. But the major thing that I want to emphasize is that we are going to be giving away some free tickets. So for those of you out there who are interested in possibly winning one, feel free to fill out the Google form down below, and we're going to be giving away a select few tickets. Again, we only have a limited number, but we'll try to give out as much as we can to all of you out there who may be interested. And I hope to see you guys there either way. So anyways, want to go ahead here. We'll take a look at the last 24 hours here. And the vast majority of cryptocurrencies here have not made any significant changes. Again, anywhere between 1% to 2% to the upside or downside. So generally no trend scenario. Taking a look here at Bitcoin here, still holding up at a general range of where we were over the last 24 to 48 hours. Prices pushing sideways here. And again, I think this is the point here where a lot of people are looking for the verdict of whether or not we're going to hold on this previous resistance and also hold at this general support range. You can see that price had pushed sideways here and over here as well. So this is a very important price range around 6,800. And again, I'm going to stand by my point, guys, that I do believe we are going to rally into the halving event as we tend to do with most halving events. And then afterwards, we're going to correct downward sometime in early May as we price in. Well, not so much price in, but after the hype of the halving it wears off. In this case, we hit resistance. And then afterwards, we're going to set a higher low here than the low back here that isn't going to come down to this line of support. And it's going to signal, much like we talked about with altcoin dominance yesterday, that the higher lows that aren't coming down to the general support band like they tend to do. So we can see here, we've tested this line 3 times. We've also tested the line of resistance 3 times. The moment you can tell that a trend shift is coming in for a bull market or for a bear market is usually, or at least when we're in a wedge pattern like this, is usually when, for example, we test up to a level of resistance and we come down and we build consistent support away from the line of support, higher in this case, showcasing that bulls are paying a premium. The exact same principle applies here with Bitcoin, and that's what I'm looking for personally. It wouldn't be the end of the world if it comes down here, but we're going to hopefully want to see here for kind of an earlier confirmation that we're setting up to break this resistance, test back up to the previous highs, and go on for the next cycle sometime in 2020, 2021, and 2022, that we'd want to see that happen here within the wedge. All right. So again, not too much is changing here. In the sense of the ScalpX index, we're still seeing that Bitcoin is dramatically oversold here compared to being overbought, where it was back here, for example, in June of 2019. It's crazy. Time flies here, guys. We're already in April of 2020, and I can vividly remember back when we were in the summer of 2019. But again, major thing here to keep in mind is that we're generally holding the vast majority of our gains. We had a nice strong recovery. It's a matter of whether or not we can continue that and get back to a consistent range of what we saw back here in the fall, excuse me, in February. My apologies. Now I want to go ahead and talk about the biggest news here, guys. Markets have not changed too much here since we last talked, but the one big piece of news that we have here is the continued developments around the Chinese digital yuan. Now, this is probably one of the biggest news pieces that people are going to ignore over the next coming months, because I know many of you out there, we've talked about central bank digital currencies. It's been a concept since 2015, and we've been talking about it since as far back as 2018 at least on the channel. I have no doubt we probably talked about it a little bit in 2017 if it was a topic at the time. But I want to go ahead and emphasize why this is important. So let's just go ahead and talk a little bit about the news itself. So the Chinese digital yuan has now been leaked to a decent degree, at least the user experience for the wallet that is being created in this case. And this is being created by I think it's the Agricultural Bank of China. Basically had gotten leaked out in this case, later retweeted by CZ and a lot of other people. Finally, we're starting to get some pictures here circulating through WeChat and a lot of other media sources online showcasing what the wallet will look like. And later on, these have actually been confirmed. This is an actual screenshot of the wallet that's being created for the Chinese central bank digital currency. And again, this is, again, more than anything, guys, I love, at the end of the day, we have to view things in a spectrum here, right? Things from good to bad, right? Of course, most people do not want, probably, I think most people in the crypto space don't want a central bank controlled digital currency. And more specifically, they don't see it as a cryptocurrency. I can agree with that, guys. I can agree with the idea that this is not a cryptocurrency if the Central Bank of China, or the People's Bank of China in this case for the actual proper terminology. The People's Bank of China has direct control over it. Overall surveillance of it, can freeze your account. That's not a cryptocurrency. I completely agree with that. It's the exact same argument I made for Libra. But as reviewing it from the spectrum of good to bad, the good side of it in this case, at the end of the day, is that we are seeing a little bit more freedom here in the sense of where money can move here for China, right? This is one of the beneficial things that's going to come about for a central bank digital currency, is it's going to allow yuan to basically move around, but it's going to be much more surveilled. It's going to be tracked on where that money's going to. There's a lot of negatives here. Now, speaking to that, there is a lot of money that does not want to have to be converted into this system. And China will make it mandatory to start migrating into this digital currency system that they're creating. This means that there is going to be a lot of money that wants to move out here as the Chinese government starts to slowly force and mandate the new system into place. So how much wealth are we talking here? And what's the vehicle that it's going to go to in order to fly out to safety? Well, we're talking easily about $1 trillion+. I would say the number is probably a little bit larger, but give or take, you've got hundreds of billions to trillions of dollars in wealth that's going to be looking to get out of the system before China instates this mandatory migration to a central bank digital currency. And I have no doubt, like we saw during the news back in October of 2019, when China officially announced that they are pursuing a central bank digital currency and that the government and its officials are going to be learning about blockchain and that they're going to be pressurizing pressuring new legislation in this case in order to continue forward and leading the way for digitization of money. In this case, we can obviously see from the market performance back in October that this is going to drive a lot of demand for Bitcoin. Massive outflows. And I think that this is one of the key elements alongside the halving event and the general macro environment with global fear that's going to make Bitcoin a very viable option. A very, very viable option here. And the reason why is because for the Chinese in this case, there's no easier way to get into a hedge or something outside of the system than Bitcoin. Plain and simple. So, anyways, I just wanted to go ahead and emphasize this. More than anything, guys, again, talking about the impacts it'll maybe have on Bitcoin and other cryptocurrencies, all in all, it is really interesting to see that this is finally shaping up. It's going to be a very interesting time over the next coming months, into the next year in 2021, and we'll have to see how this continues. I'm interested to see what China comes up with, because I have to take a step back and be very fair here. A lot of the central banks, such as the Fed and the ECB, have actually been relatively moderate in the sense of how they actually want to go about instilling a central bank digital currency. For example, Jay Powell from the Fed actually stated that if he were to create a digital currency, he would expect that it would actually be private in this case, that when I transact with you, the Fed doesn't know who you and I are and how much we're spending, just like an actual digital dollar, which is actually very fascinating. And again, we're just going to have to keep open to what happens, guys. We'll see, right? Again, I don't want to jump to any conclusions, right? But anyways, wanted to go ahead here. Last thing I wanted to take a look at here is the Moonmath win chart, the rainbow chart here for Bitcoin. You can go to moonmath.win if you wanted to take a look at this chart. I know a lot of people usually ask me for this. But just to, again, summarize here, we're doing exactly what we did last time, guys. Bitcoin basically hung within the lower band here for the darker purple area for some time. And the one thing that I want to emphasize here as we're continuing to hold a little bit lower here on the rainbow chart is to consider two things. First off, again, guys, these cycles are going to take longer than previously thought, and the returns are not going to be as dramatic. I don't think, honestly, we're ever going to touch this top purple band in the next cycle. So that's one thing to note here when taking a look at the rainbow chart. But the second thing to understand as well is that the reason why we're probably hanging lower here still is not only because we've hung in that color band for a long time in the previous cycle, but unlike the previous cycle where we just stayed within these three color bands, basically the blue to purplish bands, we actually went up to the green band and the light green band. And we started to have a premature cycle as we discussed back in 2019. So I have no doubt as to why it looks so bad on the chart here. But in reality, we just had a major precursor rally here before we actually kicked into the real cycle. So in this case, it makes the chart look bad, but in reality, we're just about where we should be. So again, be patient, guys. Focus on the longer term cycle. So going on here to talk a little bit about broader markets here, futures. I'll go ahead and refresh the page here. I always have to use CNN Business because for some reason the site I like to use, investing.com, doesn't really load US futures very well in the morning. So 7:43 a.m. we can see here futures right now trading anywhere from 1% on the NASDAQ all the way up to 1.8% down for the S&P 500, nearly 2% down. We can see global markets are currently taking a hit right now. U.S. markets probably following off of this. We can see from indices from the FTSE 100 to the Italian index for the MIB, a lot of the major European, Russian, and also Asian indices down right now, taking a pretty decent hit and rolling over some of the gains they've made over the last previous week in this case. So very interesting to see here. Now I want to go ahead and talk a little bit about this. And I think that we're very close here, guys, to seeing some general kind of short-term top here from the rebound we've had. No doubt we've had a good recovery in equities. If you guys have been making the trade, good on you. But the major thing that I want to emphasize here is that I don't think this is going to last very long. Now, we had already built a comparison when we took a look at 1929 and took a look at the end of the Roaring '20s and the beginning of the Great Depression, how we had a significant correction of over 50%, and we had a significant rebound, a lot of those losses made back up, and then a continued rollover where we not only went back down to the previous lows, but we went on to make new lows and have a full 90% correction in the Dow Jones Industrial Average. But I want to go ahead and just take a look at the data right here and really just talk about the scale of market valuations here that we've seen. So we were peaking out here back at the end of the year, right, back in December, into 2020, January, at around $89 trillion for global equities. This is the total valuation of U.S. stocks, stocks out of Asia, Europe, South America, you name it. It's combining all of the equity valuations in the world. $89 trillion of wealth. It's a crazy amount of wealth. But we had a major drop here in the chart. Now, I'm kind of got some discrepancies here on Isabella Net. It said it dropped about $20 trillion. So the chart, it says $30 trillion. If I'm looking at the chart here, around, roughly give or take $90 trillion, and I see the chart down here, it looks like it's more around 26, 27 trillion. It didn't really get down to exactly 60. But give or take here, right, we had a pretty stark correction here, and equities have made a nice rebound here up to $72 trillion. Still, dramatic losses when you're really considering global markets here. U.S. markets are kind of the optimistic case scenario, as the Fed has taken some of the more dramatic steps to stimulate markets, and also U.S. equities are more favorable than most players across the world. But the key thing here I want to drive here is that, again, when we start to test against some of these support ranges here for global equities, much like we've looked at U.S. indices, this is where I think we're going to hit some resistance and roll back over. And it has to do with the broader sense of things, guys. So let's just go ahead here and take a look at, for example, unemployed workers on temporary layoff. This is one thing that I know many people out there have brought up, which is the sheer fact that for unemployment, The numbers, of course, are spiking up because a lot of people are being furloughed. They're being temporarily laid off. They're being, basically postponed for their employment until the economy reopens, right? And the key thing that I keep driving here is that, again, not only is this number very high right now, we're back up at least here an official confirmed unemployment to back where we were back in 2008. But the key thing that I want to emphasize here for temporary laid off employees is that I have no doubt that this number is making up a small component, right? A small component of the broader unemployment figures we're going to be getting over the next couple of weeks. And not to mention that as well, I have no doubt that a lot of this number is going to shift towards longer term unemployment the longer we keep things shut down. Okay? Again, I have no doubt that you're going to see a GDP rebound, guys. It's fixed into the system here. You're going to get a rebound in GDP. But the major thing here that we need to understand is whether or not afterwards we see continued follow through, or if the longer term ramifications of people who have been basically sent into unemployment for the long term, the amount of companies that have been shut down, the general cyclical decline of economic activity sends us into a longer term recession, or possibly what would be defined as a depression. I'm not trying to be overtly negative here, guys. I have no reason to try to sell you I always love the term, it's like doom porn or something. Like, people always say that. And it's like, I don't really care to live in that world. I don't want to. But I want to be realistic in the sense of preparing for the worst at the end of the day. As a macro trader, you have to do that. And one of the things here that I want to emphasize as well is that, again, if we take a look here at the weekly jobless claims and consider it with the bear market bottom, or at least what we've had now, this is a very short period of time here where the market bottom became 1 week first before the unemployment claims came in. So again, this is assuming that this is the relative bottom. I personally don't think this is the case here, guys. Again, one of the few indicators here that if we're considering what we had as the bottom to be the bottom, in this case, this would be probably a positive indicator. But I genuinely don't think, I think we're going to be a deviation from the norm here. Anyways, you can already see here it's only 1 week, right? It's very different from the previous ones. I want to go ahead and talk about the biggest thing here. The cumulative GDP decline during recessions. Here in 2020, we already know from expectations at the moment that we're going to have an actual contraction of around 9% of the global, the U.S. economy in this case. My apologies, almost 10%. I would be as confident as to say that we're probably going to hit about 10% or more. I mean, I don't think we're taking the ramifications of this into mind, folks. All of the excessive consumer spending, the frivolous kind of economic activities that have played a huge role in stimulating the economy forward, built up usually around credit, it's not going to be here this time around. And corporate earnings are going to start to reflect that. Second quarter GDP is going to further feed into that when we start to get those numbers. So, again, just keep this in mind. Prepare for the worst here in this case more than anything. And the major thing I want to talk about again, the unemployment forecasts that are coming out of JP Morgan here, expecting unemployment to rise to 20%. I agree with that. I think that we're likely going to get something up in 18 to 20% here, as we're factoring in a lot of people claiming unemployment officially in the unemployment numbers. But the major thing I disagree with is that it's going to have such a stark decline from 20 downward to something like 7% and then quickly decline in throughout the year to 5%. This idea that we can just enter into a massive V-shaped rebound within a period of a few weeks here, not only for equities, but for indicators like unemployment, or I guess the opposite of a V-shaped rebound, basically an A-shaped rebound. I genuinely disagree with this. And it's not something I want to believe, sadly, but I'm going to be realistic, folks. At the end of the day, there are a lot of people who are not going to be going back to work immediately. There are going to be a lot of consumers who are not spending as frivolously as they were before. Many people who are catching up on baseline expenses. And a lot of banks who are not wanting to lend. Now, you would see through some of the numbers here. In fact, Isabel Net had a really interesting chart showcasing that banks are doing record lending operations. And this has to do with the small business lending programs, a lot of the things that are going through right now in order to keep businesses afloat. But the one thing I want to emphasize that's very important is that there have been a lot of new restrictions from the major banks on mortgages. They're not lending out to a lot of people who aren't willing to make, up to a 20% down payment, which just, for the last few years is unheard of. And along with that as well, basically aren't lending out to people who don't have a credit score of 700 or above. This is, I think, either what Goldman Sachs or JP Morgan recently did. And I have no doubt that other banks are going to follow in those standards. They tend to follow one another like a flock of birds, right? So the major thing to emphasize here is that there are so many little small things that are going to persist in this environment until we really give it some time and let the economy get back into a cyclical cycle of optimism. We are not in the optimistic phase of this cycle, folks. Equity markets might trick you into thinking that, but give it a couple of weeks. Give it a couple of weeks. I'll stand by that statement. Be patient. Watch what equity markets do. If we get the V-shaped rebound, you know what? I'll take back any confidence that I had from calling the bear market originally. All right, I won't brag about that. I try not to brag about things like that in general. But all in all, guys, serious topic here, right? Markets have had a nice rebound. No doubt. They've recovered the vast majority of their gains here. Or excuse me, the vast majority of their losses, about half. Watch what happens here over the next 2 or 3 days. Keep an eye on the VIX. Watch what volatility does here. That's all I got to say. Okay. So anyways, this is actually an interesting chart here. I forgot to show you guys. I don't know if I've talked about this. We had this written in the newsletter that we were expecting a break out of the wedge here. And it's funny. I've seen people on Twitter in various places. I can't remember where I was reading it. People laughed at you people who do TA on the VIX. This is one of the most important things to do TA on, to see consistent resistance ranges and consistent support ranges. I mean, the VIX was doing this for years now, since back in 2018. And if you weren't watching this, if you were just looking at the S&P 500 and you weren't looking at what was going on with COVID-19, you wouldn't have known that a spike was coming soon. We talked about this in the newsletter, right? Now, we expected, to be fair, a little bit later in April, right? But we were expecting a VIX breakout here. And the moment we saw this open above here, this is where I got really confident that COVID was going to have dramatic ramifications on markets. I mean, we already had watched it and talked about it since late January, early February. But I digress. Just wanted to share this with you guys. If there's a way that you guys want to support the channel, definitely consider subscribing to the newsletter that we have. It's one of the ways that you can really support me and what I do here on the channel. But again, no pressure, guys. There's a lot of interesting information that we cover in there. We talk about crypto markets. We talk about equity markets, commodities, and Forex, a whole scope of what's going on in the global markets. All right. So anyways, that's it for the video. Thank you all so much for watching. I'd like to hear from you guys down below in the comments what you all think about this. If you like the video, please drop a like. It helps out the channel a lot. So that all being said, I hope you all are having a fantastic day wherever you are, and I'll see you all in the next one. Stay tuned.